Hello, ladies and gentlemen. Good morning. It's a Friday. So we are writing on the last trading day of the week. I'm so excited today to come in with you this morning. So let's quickly confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, please type in hi in the comment section so that we can get this started. I would like to see some confirmation, please. If you can see my screen and you can hear my voice, I'll need some feedbacks. Type in hi. Let me see some comments and let's get this started. So I will be looking in the comment section to see. I'm trying to load up my comments section, please. I'm finding it difficult to connect. Let's see what's happening here. Please, I would like to see some feedbacks. Let's get this started. All right, so thank you. I can see Carrie in the comment. Thank you very much. Hey, yes, it's a Friday. 398, good morning to you. Thank you very much. Nasia Helena. All right, thank you. So I want to assume that we are good to go this morning. I'm so excited to welcome you to another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour I will be your host as we evaluate the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you are highly welcome on board and welcome to the family as well. So what we simply do here on a daily basis is to come together as a community to review the financial market. We normally have random pairs which we choose on Mondays, and throughout the course of the week, these are the pairs and instruments we always monitor as we position ourselves throughout the course of the week. So on a daily basis, we come here to review those pairs and see how well they are doing, and then position ourselves again for the next New York session. At first, it might look a little bit complicated, but I assure you with time you get to understand how this works. I would advise you to stay tuned in throughout the course of the session. Then join us, come back and join us on a daily basis, 10 a.m. UTC, as we gather here to review the chart. And I assure you with time you get to understand how this works, and you will be able to use the information you have gathered here to make your individual and independent decision on whatever instrument you are trying to trade on. So once again, you are welcome, and let's dive into the chart. Well, before I do so, I want you to know that this is a Friday, and it's always since this is going to be the last trading day of the week, we always try to round off on all the pairs that we have been monitoring since the beginning of the week by ensuring that we secure whatever running position we have, as most of the time it is peculiar with Fridays that price action normally moves the opposite direction of how it has begun the week, as most traders or participants in the market will want to be doing some profit-taking activities, which shall be reflected on the chart as a retracement or pullback depending on the current structure. So we shall be looking into that. I will be giving you an advice on what to go and how to go about this during the live session. So with that being said, let's get to it. So the first thing we normally do on the morning on an early morning like this is to check the economic calendar to see if we have any macroeconomic events that will definitely be giving us an insight into the sentiment or the emotional psychology in the market, which obviously drives price movement. So we want to see what participants in the market are going to be looking forward to today. And obviously Friday's March 17th, we only have one major macroeconomic event affecting the instruments that we have been monitoring since the beginning of the week. So we are going to be having the the University of Michigan's readings, which is going to be the Consumer Sentiment Index. This is a survey of personal consumer confidence in economic activities. So it actually gives us a picture of whether or not consumers are willing to spend money. And generally speaking, it's a high reading always anticipates a positive signal for the dollar, and a low reading is always a bearish signal for the dollar. And now with the data we have here, the previous data came in at 67, and we have a consensus projecting a 67 as well. So we're expecting that we really are not going to have any significant change in this data. So we are going to be looking forward to this event. It's coming up in 3 to 4 hours from now. So let's also put this in view while we monitor price action. So with that being said, let's get into the chart. So as usual, the first commodity we are going to be looking at this morning is the US oil. And in fact, the US oil has been one of the most profitable trade for us this week, as we rolled the move all the way down as the US oil tumbled over 6 to 7% to the downside. And as you can see what happened, the week started at around the $77.20 area. So initially, let me zoom this in so that we can see what I'm talking about here. So if I zoom it in, so this is where the week started for us on the US oil. So we had the situation figured out at the beginning of the week, where price action was caught within a channel where the resistance line of the channel situated at the $77.20 area, and we had the support line of the channel situated at the $76.50 level. And you all know what we look out for whenever we do have this kind of flat channel. We want to remain patient and wait out for either a breakout of the channel to the upside or a breakdown of the channel to the downside for any trading opportunity. And lucky enough for us, during the live session on Monday, we saw our price action broke down the support line at the $76.50 level, which triggered our sell position at the beginning of the week. And I also told you that morning that we shall be anticipating another breakdown retest of the structure at the $75 area for another trading opportunity, which we were lucky enough to be part of, as we had our sell stop order triggered below the $75 area. And in fact, price action moved significantly well in our favor, as we had the second position closed with about 260 pips in profit, as price action hit our TP target at the $72.50 level. And also the first position also closed with about 400 pips. So as at the first day of this week, we were already profitable on the US oil. And since then, price action has continued to find lower lows and lower highs, and we were lucky enough to be part of those moves, as we were able to add more positions at the breakdown retest of structures. So we finally saw the breakdown of that $72.50 level, which was our bullish platform for last week's trading session. So we saw the breakdown of that structure, and it was at this point we added more position, and we continued to ride the move all the way to the downside. Now, in the last 48 hours in this market, we can see that price has been caught within a channel just right within the $70 area, as you can, between the $76.85 level and the, is it 76? Let me extend this out a little bit so that we can see it clear. Okay, 68.85 So we had a situation here in the last 48 hours where price action was caught within this channel at the $68.85 level and the $66 area, to give us that there is an indecision in this particular market. And remember what I told you at the beginning of the week, that we are going to be using this bearish trend line as our yardstick for trading activity. And what does that mean? Well, it simply means that as long as price remains within the bearish trend line, that is, if price action continues to trade to the downside of the bearish trend line, we shall feel comfortable in our sell position. But if we do have a breakout of the trend line, then definitely we want to be looking out for buying opportunities in this market. And if we look at what happened here yesterday during the New York session yesterday, we saw another sharp rejection of the $66 area, as price action was unable to break down the previous low here. And you all know that from a technical standpoint, when we have a new high, a new higher low, it's a sign that buyers are gradually finding their steps in this market. And with that kind of situation here, it is very advisable that we look out for buying opportunity with the hopes that price action will break out of that bearish trend line. And as you can see, what happened during the early hours of today, we finally saw the breakout retest of that trend line to signal a potential bullish momentum in this market. So at this point in time, as long as price remain above the $68.85 level and the bearish trend line here, we shall remain bullish in this market. So I already have a buy position triggered above the $68.85 level with the hopes that price action will continue to the upside, breaking above the $70 level. And for those who have been part of this buy position, well done to you for being on standby to have caught that move. So I will be advising you secure your current position. Remember, we are on a counter trend opportunity here, and we want to ensure that we follow up with this trade as price action moves in our favor. So as long as price moves in our favor, we continue to move our stop loss accordingly to secure this position. So for those who had missed out on this opportunity here, well, I will be advising you to remain patient at this point, as we're going to be looking out for a breakout retest of the $70 area for you to be able to join this potential move to the upside. Please note that this is a counter trend opportunity, and we should be using the structures that we have here to ensure that we move our stop loss accordingly. Now remember, we had a breakdown of the $72.50 level, which was initially a strong demand zone in the past. Well, for the sake of clarity, I think we should scale up to the 4 hours time frame, right, so that we can see things more clearly and understand the importance of that structure. So let's scale up into the 4 hours time frame so that we can see things more clearly at this particular point in time. So this is the 4 hours time frame here. And prior to the beginning of this week, we had a situation here where price action was initially caught within the channel around the $80 zone and the $73.50 zone area. And this lasted about a month, as throughout the month of February, we saw how there was a strong indecision in this market, as participants were not finding a headway or where price action will be going. And with a significant breakdown of that $72.50 level, that is that demand zone here, during the course of this week, it was a beautiful signal that we might be going bearish in this particular market. And with the situation of things, I would like to let you know that price action has broken down the previous low, that is the $70 mark, which was the lowest point price has ever been in the last 1 year. So we saw the breakdown of that structure, which is quite significant. And as soon as price got into the $66 area, we have begun to see something that looks more like a reversal pattern. And with the breakdown of this bearish trend line this morning, I am of the opinion that we might be seeing a counter trend opportunity this morning. So let's continue to guide our positions accordingly. Now, the reason why I have scaled up into the 4 hours time frame is to show you the importance of the $72.50 level. So remember, I told you this level was broken to the downside this week, and from a technical standpoint, you all know that whenever we have a breakdown of structure, there is a high chance that price action is likely going to come back to do a retest of that structure in anticipation of another wave to the downside. So we are going to be placing this into consideration as well, so that as soon as price gets into the $72.50 level, we want to secure all our buy position and wait out and see how price action will be reacting to that structure to decide if we are going to be adding more position to our existing trade, or we are going to be getting ready to join another wave of bearish momentum to the downside. So this is what we shall be looking forward to. So as soon as price gets into the structure, we want to see how price action will be reacting to this level to decide if we are going to be selling. So if we scale down to our lower time frame, probably your 15 minutes, your 10 minutes time frame, and you start seeing selling pressure, that is price finding it difficult to break out of that structure, sellers negating all attempt by the buyers to break out of that level, then definitely this will be a signal that we want to be getting ready to sell. and then a breakdown retest of structure around that area on our lower time frame will definitely welcome a sell position in this market. However, if price action breaks out of the $72.50 level and we start seeing buy pressure above this level, it will be a beautiful opportunity to add more position to our existing trade. And remember, above the $72.50 level has been a strong demand zone during the month of February. So we might likely see that price will resume its bullish pressure if it so happens that it breaks out and retests the $72.50 level. So let's put this in mind as we anticipate this potential bullish momentum to the upside. So I will be scaling back into the 1 hour time frame. Now, in as much as we look out for buying opportunity in this market, like I always say, the market is very fluid, and we also want to be as fluid as possible so that we can make money off the market. So with the situation we have here, and considering the bearish momentum that started this week, it is very, very likely that sellers could still take over this market. So we don't want to ignore the possibilities of a selling momentum happen in this market. And if a selling momentum is going to be happening in this market, how do we intend to take advantage of that opportunity? What do we want to be seeing on this chart that will make us consider selling the US oil today? Well, for me at this particular point, I will be taking into consideration this channel situated between the $68.85 level and the $66 area. Now, the next question is, where is the lowest point price has ever been this week, and that is the $66 level. And the next time price ever came into that structure was on Thursday. That was yesterday's New York session. We saw price come into that structure, but what did we see happen around that area? We saw two sharp rejections of the $66 level, where both candle closed in the form of a hammer candle. And from a technical standpoint, a hammer candle is a candle that reveals the strength of buyers in a particular structure. And with the situation here, the inability of price action to break down the previous low, finding a new low for me is a sign that a bullish momentum is gradually coming in. So for me to sell the US oil, I want to see price action take out all the buy position at the $66 area to give me a good signal to join a decline to the downside. So what I want to be seeing in this market for me to be selling the US oil is to see price action break down the $66 level, and if possible we start seeing some selling pressure around the structure, giving us a clue of where price action will be going. But for me, at this point, I doubt if this is going to be happening today, but if it does happen, we want to be on standby to catch this opportunity. So these are my views here on the US oil for today. If you have questions, feel free to drop your inquiries in the comment section. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before we move on to the next option. So in the comment section, I can see Misab, good morning to you. 3271, good morning. Jank Rasentis, I hope I pronounced that correctly. Good morning to you too. Hello Cast, good morning. How are you doing today? Trust you're doing well. All right, so in the absence of no questions, I will be moving on to the next option. So the next option we shall be looking at today is the US Tech. And in the last 24 hours, the US Tech has been the most profitable trade for us amongst the peers that we have been monitoring since the beginning of the week. So let's quickly run through how the week started for us on the US Tech as we dive in to the current structure. Now, looking at the situation here, the week started on a very, very slow note as we were unable to make a decision for the first 48 hours. As you can see what happened here during the first couple of days of this week, we saw that price was quite choppy in this market as a consolidation phase existed between the $12,100 and the $11,800 area. And the importance of the $11,800 cannot be overemphasized here. In fact, I will need to scale up to a more higher time frame for us to see the importance of that 11,800. So in order to do this, let's scale up a little bit higher into the 4 hours time frame so that I can share with you what we actually saw in this market at the beginning of the week, and for the sake of those who are not part of our live session on Monday, so that you can also be part of the current perspective we are looking at in this market. Now look at the 4 hours time frame on the US tech. What did you notice? Throughout the month of February, it has actually been bearish on this chart. If you look at the structure, considering the lower highs here, and when we connected the series of lower highs, you can see that we have a bearish trend line. In fact, we have a couple of bearish trend line here. I have the major one here, which is a thick line, and I have the temporary one, which is the thin line that you can see on your screen. So this trend line has been guiding bearish momentum since the beginning of the week, but one thing that negates the option of continuing to sell the US tech on this chart is the fact that price action was unable to find a lower low. And if you look at what happened here since the beginning of the month of February, you can see how the 11,800 has been a strong buying niche in this particular market. So every attempt by the sellers to break down the structure was negated by the buyers at every point in time. As you can see what happened here on the first day of the month of February, we saw what happened here at the month of March, the first day of the month of March, and we saw what happened here during the first day of this week too as well. So we saw that at every point in time sellers try to break down the structure, it has been negated by the buyers in this market. So the bearish momentum we noticed so far with this bearish trend line is not valid, is not going to be supporting a bearish momentum unless we see price action break down the $11,800 level, taking out all the buy position at that structure. Then we could be comfortable of thinking of selling the US tech, but that did not happen as we continue to see sharp rejection from the 11,800 since the beginning of this week. And for us in this community, what we saw here was a beautiful signal that we might be going bullish for this week. Now, how did we position ourselves in order to catch this trading opportunity? So we saw this happen at the beginning of the week. This was on Monday. We saw the same thing happen on Tuesday morning. We saw the rejection of the 11,900. Price action continued to find higher lows, and as a result of this, we had this bullish trend line figured out, and we agreed here that we shall be using this bullish trend line as a yardstick for trading activity. So what we simply said is, if price action continues to trade above the bullish trend line, we shall feel comfortable in our buy position. And if it so happens that a breakdown of the trend line happens, then definitely we want to be looking forward to a momentum shift. Now, during the Tuesday session, I think Monday session, I told us all that if price action breaks out of this bearish trend line, remember the bearish trend line I shared you on the 4 hours time frame. So a breakout retest of that trend line will definitely be signaling a buy position for us. So we were able to position ourselves above the $12,000 area with a buy stop order in case price action breaks out of that structure. So we had the breakout of the $12,000 level. That was on Tuesday. During the New York session on Tuesday, we had the breakout of structure. We added another position here at the breakout of the 12,100 level, as we had two positions running as of Tuesday trading session. So we had the first position run with about 220 pips before the sell momentum began here. We also had a second position run with about 150 pips before the sell position was identified. So right now we saw the situation here on Wednesday, and during the live session we said, like we have already agreed, that buying pressure above the bullish trend line will continue to give us an opportunity to buy. So we had a breakout of the 12,100, retest of structure for the confirming this bullish momentum in this market. So we joined here. We had positions here on Wednesday's New York session, and price action went up to the upside. So during the live session yesterday, this is what we saw in this market during the live session yesterday. Where were we during the live session yesterday? We were around here Hold on a second. Let's quickly run through this together. Okay, so we were around the $12,280 area, and it was at this point we identified this beautiful channel here where the resistance point of the channel was at the 12,300, and we had the support line of the channel sitting at the 12,240. Now there are two structures I identified here yesterday which we can be using to buy the US tech. Remember, I told you that we will be looking at one. If price action breaks down the support line, we are not joining the sell momentum, as we have a bust up here at the 12,170, which also shares a confluence with both the bearish trend line we identified on the 4 hours time frame and the bullish trend line we said we shall be using as a yardstick for bullish momentum. But this did not happen, so the second option is what we had happen here. Remember, I told us all to have a buy stop order above the 12,300 level, where we shall be looking out for buying opportunity in this market. And this was exactly what happened during the New York session. I think a couple of hours into the New York session yesterday, we saw price action move significantly well, breaking out of that structure, and in fact it's moved over 300 pips in our direction before we started seeing this consolidation phase in this market. I'm very sure some of you must have taken your profit at this point, like I did here. We already took our profit at the 12,600 level. But if you still have your position running at this point, it's okay. You can move your stop loss right now to secure this current position as we continue to monitor price action. And the most appropriate area I will think that we could put our stop loss at this point is somewhere right above the 12,535 level, which appears to be the support line of this beautiful channel we just identified during the early hours of today. Now, for those who have been part of this trade, well done to you guys for being on standby to catch this move, and congratulations to everyone. And for those who had missed out on this opportunity, well, I'm of the opinion that the market is likely going to be giving us a trading opportunity for today. But before we go into the details of what our expectations are for today, let's quickly run through the daily time frame. Let's have an holistic point of view of what is going on here, and let's use it to determine what to look out for on the lower time frame. Now, if we are going to be doing this, I would suggest that we scale up into the daily time frame. So let's run through the daily time frame and see what is really going on in this market. Now, right here on the daily time frame, we have observed here, obviously, that price action has been bearish, at least throughout the course of last year. And we also emphasized the importance of the $11,000 area, which negated all the sell momentum in this market, and this led to the final breakout of the bearish trend line, I think the first day of the month of February. And since then, price action has been finding higher highs, hereby informing us that this bearish trend line is no longer strong enough to hold that bearish momentum anymore. And since the beginning of this year, let me zoom in so that we can see things more clearly. Since the beginning of this year, price action has been bullish. And to further emphasize the strength of the buyers in this market, we have these higher lows connected, and we had a bullish trend line figured out here. Now, one thing about this current structure is that as soon as price got into that $12,900 level, if I zoom out, you can see how this level has been a strong selling niche for participants in this market since the month of March of last year. Then during the month of February, we saw how the structure, after the retest of that 12,900, we saw how the structure evolved into a reversal pattern in form of a double top structure. And with the neckline sitting at the 12,300, we had it broken, sharing a beautiful confluence with that bullish trend line, where price action broke down of that trend line for the first time since the beginning of the year. And this was the bearish signal we took advantage of. But one thing we have noticed so far is that as soon as price got into that $12,000 level, a very strong psychological level in this market, as it has been a major determinant of price action in the last 4 to 5 months. And remember, it was initially a sell zone for us throughout the month of November / December last year, before we saw the breakout of this level here during the month of February. Now, from a technical standpoint, whenever we have a breakout of a structure, we expect that price action is likely going to come back to retest the structure in anticipation of another wave of bullish momentum. And what do we have here in the last 2-3 weeks now? We saw that price came back into the $12,000 area. In fact, we had a couple of breakdown of that structure where we were actually thinking that we are going to be selling, but we were caught by surprises here as we saw sharp rejection of the 11,700, giving us a clue that buyers are very strong in this particular market. And lucky enough for us, at the beginning of this week, we were able to be part of the buy position as we saw price climb above the $12,000 level one more time to give us a signal that we are going bullish for this week. And thank goodness we were able to be part of this, as we were able to scoop over 600 pips on this one in total for this week. Now, with the situation of things right now, what is going to be our expectation? Now, we have price action breakout of that key level at the 12,300 during the course of yesterday's trading session. So are we going to be seeing some level of retracement in this market where price would likely come back, do a retest of the 12,300 or the 12,100 level in anticipation of another wave of bullish momentum? So this is where we are right now. So for those who are still in the buy position, ensure you have moved your stop loss to secure this current position as we look at the current market structure to decide if we might be having a retracement during the course of this market. And one thing I would like to state here is that we have a macroeconomic event coming out today, that is the Consumer Sentiment Index, which has the tendency of bringing some liquidity into this market to drive price movement, and wherever price will be going through today might likely be very massive in this market. So how do we intend to position ourselves for this opportunity? Now, at the top of this engulfing candle, we have a situation here since the beginning of today where price action is looking a little bit indecisive right now, and I'm sure this is as a result of the anticipation of the event coming up today. So what we want to be doing right now is to scale back down into our lower time frame, that is then look at the 12,600 level to see how price action is transitioning around that area to decide if we are going to be having a counter trend opportunity, which might likely be a retracement of the impulse leg we have been enjoying since the beginning of the week in anticipation of another wave of bullish momentum, or we could have a situation where a trend continuation pattern is identified around this area at the 12,600 to incite a trend continuation to the upside. So these are the things we are going to be looking at when we scale down to a much more lower time frame. And in that regard, let's move into the 1 hour time frame and let's focus on the 12,600 level. Now let me zoom in, as that is where we want to be focusing on for today, and that's the 12,600 area. So you can see what has happened here. So since price action hits the TP target at the 12,600 level, here we saw some sharp rejection of that area, whereby price action transitioned into a flat channel like this between the 12,600 and the 12,550 level. And you all know what we look out for whenever we have this kind of flat channel. We want to remain patient and wait out for either a breakout of the channel to the upside to give us a buy opportunity, a buy signal, or a breakdown of the channel to give us a sell signal in this market. Now, in this kind of situation here, we can see that during the early hours of today, we saw our price action has broken out of the 12,600 level to give us a signal that this current market structure has a high chance of transitioning into a trend continuation pattern. So following the breakout of the structure here during the early hours of today, we saw a retracement back into the 12,575 level, which has also been a major determinant of price action in the last and the last couple of hours. You can see this level has been a strong buying niche in the last I think 10 hours thereabout, and I'm of the opinion that this might continue to the upside. So in that regard, we shall be having a buy stop order right around the 12,600 or just above the 12,600, so that we can be part of this bullish momentum if it finally begins. So that is how we are going to be looking forward to a trend continuation here. So for those who had missed out on the buy position we have in this market, we are going to be looking forward to a breakout of the 12,600 level to join a trend continuation to the upside. In as much as we continue to look out for buying opportunity as usual, we want to be looking at the possibilities of price action doing the opposite. Now, if we look at the structure here, let me zoom out a little further to see what has been happening since the beginning of this week. You will see that we have a long impulsive bullish momentum to the upside, and from this current structure, a retracement is long overdue. And we might likely have a situation where price might start a retracement if buyers are finding it difficult to break out of the 12,600, probably prior to the macroeconomic event or post the macroeconomic event. If that becomes the case here, that price action finds it difficult to break out of the 12,600, then a breakdown of the 12,550 will make this market structure transition into a reversal pattern. Then a breakdown retest of the 12,550 on our lower time frame, it could be your 5 minutes, your 10 minutes time frame, will be inciting a retracement, which will definitely be a counter trend opportunity in this market. So we might likely want to be joining that move to the downside if the breakdown of the 12,550 happens. And remember, we have this bullish trend line, which I said will be our yardstick for trading activity for this week. So if I extend the bullish trend line further into the future here, it might be an area to look out for our TP target for any selling opportunity in this market. So we could have between the 12,300 and the 12,240 area as an area to look for a TP target for this counter trend opportunity that might likely happen today, where we shall be looking forward to buy pressure around this area to incite another wave to the upside. So these are the things we shall be looking forward to on the US tech for today. So I hope that we'll be on standby to catch either of this opportunity as the market evolves. You might also want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this one. So moving on right now, we shall be moving on to the GBPUSD. If you have questions, feel free to drop your inquiries in the comment section, please. So right now we are on the GBPUSD, and what has been happening on this chart since the beginning of this week? Well, if you look at the situation, if I zoom out a little bit, you will see that we have a huge channel here where price action has been oscillating between the 1.2200 level, which has been the highest point price has ever been for this week, and we have the support line here at the 1.200 area, where price has not even tested since the beginning of the week. Though the beginning of the week started at around the 1.20350 here with a huge engulfing candle. Remember, we saw the situation here. We saw the first resistant line here had a 1.21050 level. Price did a retracement back into structure. Then we saw this huge engulfing candle breaking out of that resistant line for the first time this week. And for us, that was a beautiful signal for us to join a rally to the upside. And during our live session on Monday, I told us all to remain patient as we want to see price action give us some reversal pattern, lining up with that bullish trend line which we initially used to guide trading activity for the week to buy the GBPUSD. And we were lucky enough to be part of that move as price action moved about 120 pips thereabout before the sell pressure began here. Then we also had the second position triggered at the breakout of the 1.210 level here, and that one also moved about 100 pips before the sell pressure began. And the consolidation phase around the 1.220 level and the 1.21450 was so strong that it lasted a whole 24 hours here, as you can see. And one thing we noticed during the live session on Monday was that price action was beginning to find lower highs. And you know, I told you on Tuesday that if this bullish trend line breaks to the downside, then we might be seeing that as a momentum shift, where we shall be having a sell stop order below the 1.21450 level to trigger a sell position. And we had that position run on Wednesday morning. Price action moved about 130 pips in our favor before this bullish momentum began. And during the live session yesterday, I told us all that we have a sell window here with the hopes that price might likely come into the sell window to incite another wave of bearish momentum to the downside. But the fact that we saw this buy pressure here during the live session yesterday was a sign that we might likely be seeing a bullish momentum to the upside. So I told us yesterday that we shall be looking forward to a breakdown retest of the 1.20350 level for us to be joining a decline to the downside. That is, we want to see price action take out the previous low here to give us a confirmation to join that rally to the upside, to join the decline to the downside, sorry. But what we saw here in the last 24 hours is quite interesting as we continue to see buy pressure resume here, and since then price action has been finding higher highs and higher lows. And if you had missed out on all of this opportunity here, remember I told us all that the bearish trend line will continue to be our yardstick for trading activity as we look out for selling pressure below the trend line to guide our bearish momentum. But one thing we saw here was that price action broke out of the trend line, retested the trend line at the 1.21050 level to signal this bullish momentum. And if you are taking advantage of this move right here, kudos to you, as price action moved about 75 pips before we started seeing this bearish move to the downside. So now that we are heading into the New York session today, how do we intend to trade the GBPUSD based on this current structure? Well, one thing I would like to call our attention to here, first of all, is the bearish trend line that we identified here since Tuesday, where price action has been respecting bearish momentum below that structure since Tuesday. Now that we have a breakout of that trend line, we might want to see price action do some retest of structure to incite another wave of bullish momentum. But one thing I did here was to scale down to a much lower time frame, and I was able to identify this simple setup here. Let me quickly show you that. I think I identified this on the 4 hours time frame, and I actually shared this on my public platform this morning. And this is what I saw as at this morning here after taking advantage of this buy position, hitting our TP target there. I noticed that the 1.21800 level has been a strong selling niche in this market since Tuesday, I guess, since Monday, sorry. So we have been seeing selling pressure in this market, and if we connect the series of lower highs, there is this bearish trend line on the screen. Now with the situation here, following the sell pressure around the 1.21800 level, I'm of the opinion that if price action breaks down the 1.215, a level which has been a strong buying niche at one point before we saw the breakdown happen here on Wednesday, another breakdown of this structure, as you can see here, price was unable to break the previous high, so a breakdown of the 1.215 level will be welcoming a sell position in this market. And there is already a sell position running here. If you are not yet in this trade, well, I still think that there is still an opportunity to join or add more position to this trade. So this one has a stop loss above the 1.218. So I'm hoping that price will continue into the demand zone here. Now, if you had missed out on the 1.21500 level, well, we also have another structure here at the 1.21100 level. And this structure here shares a confluence with this bullish trend line. That is the trend line that has been guiding bullish momentum since a couple of days ago. That's on Wednesday. I want to see how price action will be reacting to the structure to decide what our next line of action will be. So if it so happens that price action breaks down the 1.21100 level, breaking down that bullish trend line, this will be a beautiful signal that we want to be going bearish. And if we are lucky enough, we start seeing certain pressure below the structure on our lower time frame, it will be a beautiful opportunity to add more position to our existing trade on the GBPUSD. So we shall be looking forward to see how price action react to the 1.21100 level to see if we want to be adding more position to our existing trade. However, if price action gets back into the structure and we start seeing multiple rejection, that is, sellers finding it difficult to break down that structure, we might likely be seeing another wave of bullish momentum come in. So we want to be looking forward to a reversal pattern on our 15 minutes time frame or 10 minutes time frame to anticipate the trend continuation to the upside. Then a further breakout of the 1.21800 will definitely welcome additional position in this market. So let's be on standby for these opportunities. Screenshot my screen if you want so that you can use it as a reference point when you're about to make your individual decision on the GBPUSD. If you have questions, feel free to drop your inquiries in the comment section, and we'll be checking it from time to time to see if there are any for me. Then moving on, we went on to treat XAUUSD at the beginning of the week too as well. And on the XAUUSD, we also had some profit-taking activities here. We had the situation at the beginning of the week. The week started on a bullish note on the XAUUSD as we saw our price sprang out of the 1,869 Monday morning. In fact, we had an engulfing candle out of that structure, but we were not part of that position as we saw price action fall into this channel between the 1,895 and the 1,869. And you all know what we look out for whenever we have this kind of flat channel. We want to be seeing price action breakouts, retest the structure for buying opportunity, or breakdown retest for selling opportunity. And what we saw here on Monday morning after our live session, I think a couple of hours after the live session on Monday, we saw the breakout retest of the 1,895, which triggered our buy position in this market. And in fact, price action moved about close to 2,000 pips in profit before we witnessed the sell pressure resume at around the 1,915 later on that Monday's trading session. Then during the live session on Tuesday, I told us to sell below the 1,904 area as we cited a bearish trend line in that regard. And for that Tuesday's trading session, we actually identified this trend line as a yardstick for trading activity. As we said, if price action continues to trade below the trend line, we shall feel comfortable in our sell position. And that was what we were doing as price action continued. In fact, it moved to the downside on Wednesday to about 1,700 before this bullish momentum began. And during the live session on Wednesday, we identified this and we said we saw this breakout of the bearish trend line, and I was of the opinion that it could turn out to be a false breakout. So we want to be patient to see how price action will react after that breakout happened. So I said we want to see a retest of structure, which actually happened. But if you had missed that one, I also said we should have a buy stop order above the 1,915 level, which was triggered, and price action moved about 2,000 in our favor. And since then, price action has been trapped within this channel, just within the 1,935, which has been the new resistant line in the last 24 hours now. That's the resistant line we have here, 1,935, and the support line at the 1,915. So we are caught within a consolidation phase right now as everyone anticipates and looks forward to the consumer sentiment index to have a clue into what will be happening next. So with this kind of situation we have right now, if you are still in the buy position, ensure you move your stop loss accordingly to secure your current position. And I think the $1,925 level seems most appropriate to secure your position here, with the hopes that price action will be breaking out of the 1,935 level. So if we should have a buy stop order above that area, because for me, considering the long-term bullish momentum in this market, there is a high chance that price action is likely going to be breaking out of the 1,935. And if it does so, we want to have a buy stop order above that structure so that we can be part of this potential move to the upside. Now, there is another thing I also wanted us to look at here, considering the continued selling pressure which has been existing in this market in the last 48 hours. So we want to also consider the possibility of sellers actually coming in this market. And what I did to identify that was to create a new chart. and then I scale down to a much more lower time frame, like the 30 minutes. Is it 30 or 15 minutes time frame? Let's quickly look at that. I think. All right, so I looked at a 15 minutes time frame here, and I readjusted the 1935 to 1930 area, which will definitely be what we shall be using going forward. Now, one thing I said here is that if the sell pressure around the 1930 1935 area will become valid, then I want to see price action break down the 1928 level. As you can see here, since in the last 8 hours in this market, we can see how the 1928 level had been a strong buying niche, and every attempt by the sellers to respect this resistance line was negated by the buyers around the 1928. So for this to be valid, for the sell pressure around the 1930, 934, 985 zone should become valid, I want to see price action break down the 1928 level, selling pressure below that structure on my lower time frame, then want to be joining a sell momentum to the downside. And if that is going to be the case at this point, the bearish trend line identified here shall be our yardstick for selling opportunities in this market. So I want to see price action drop below the 1928, respect the trend line, then move to the downside, then continue to look out for more opportunities to add more sell position to our existing trade. Then the other thing I also saw here is that if instead of price dropping below the 1928 level, and instead of this, price continues to the upside, breaking out of the trend line here, I will be thinking of buying opportunity here. And if you look at what has been happening in the last couple of hours now, we saw the breakout of the trend line. Price appears to be doing a retracement. Now we don't know how far this retracement is going to be going. Is it going to retest the trend line, or is it going to retest the 1928, where the appearance of buy pressure on our lower time frame will be inciting another momentum to the upside? So these are the things we shall be looking at on this one. So for us to have a cleaner view into this expectation, I want to identify a resistant line. As you can see, since the beginning of today's trading session, we have seen our price action has been caught within this channel. So I want us to identify the structure here. So this area is the 1932, I guess. Okay, let me label it $1932.50 level. Okay, so here we go. So right now, with this kind of situation, price action breaking out of this trend line, we shall be having a buy stop order above the 1932 with a stop loss for the structure here somewhere around the $1928 level to protect our portfolio against a risk of to reduce our risk on this one. So we should have a buy stop order above that structure and hope that price action will continue to the upside. So what this current structure simply is telling us for today is to look out for buying opportunity above the $1932.50 level and look out for selling opportunity below the 1928. So I hope we'll be on standby to catch this move as we wait out for a breakout of this consolidation phase to happen. And we shall be seeing this close to the macroeconomic event or probably after the macroeconomic event. So let's be on standby for this one to happen. So that is that on the XAUUSD. Then we're going on to close the day with the USDJPY. And on the USDJPY, it has been a very, very choppy situation here since the beginning of this week. As you can see, price has been trading between the 135.100 level since the beginning of the week. That is the highest point price has ever been this week. And then the lowest point price has ever been this week is around the 132.500. Well, the beginning of the week started with the consolidation phase here. We sold the breakdown retest of the 135.600, which gave us about 100 pips thereabout before this bullish momentum began. Then the day after Monday, I think Tuesday, we started seeing buy position. We were part of this one, and we agreed that we are going to be using this bullish trend line as our yardstick for trading activity. So as long as price remains above that bullish trend line, we remain comfortable in our buy position. But if price action breaks down the bullish trend line, we were looking out for selling opportunities. And on Wednesday morning, we saw the breakdown of the structure. We talked about this briefly during the live session on Wednesday, and we said we are going to be adding more position if price action breaks down the what level is that? 135.600, and price action did break down. And since that Wednesday's trading session, we have seen a situation here where price action is in another phase where there is a consolidation phase going on at this particular point in time. And you all know that we have a macroeconomic event coming up later today, and this is more or less it's been reflected on the chart as participants are stepping aside to see what is really going to happen before making a decision on this current structure. And you all know what we look out for whenever we have this kind of setup. We want to be waiting and look out for either a breakout or breakdown of the channel for trading opportunity. But with the way things are right now, I am of the opinion that we might likely be seeing a bullish momentum during the New York session today. And why have I said so? Well, if you look at what has been happening in the market since the beginning of this week, you will see how important the 132.500 level has been for the buyers in this market. Look at the first time price came into the structure. Despite the fact that we had the breakdown of the structure with a strong bearish momentum, we saw that buyers negated all sellers' attempts at this point. Then the same thing happened on Wednesday. Here we saw multiple buy pressure negating all attempt by the sellers to break down of that level. Now, during the course of yesterday's New York session, we saw a sharp breakdown, but immediately we saw price climb up again to the upside to further emphasize the strength of the buyers. And right now, in the last 10 hours, we can see that price is yet to break the previous low. And for me, at this point, this is a sign that we might be having a bullish momentum. So in that regard, we are having our position here right above the 135.600 level with the hopes that price action will be breaking out of that structure. And if we take a closer look at what is really happening around here, you will see that it appears price action is gradually transitioning into a possible reversal pattern in the form of an inverse head and shoulder pattern, where we have the left shoulder here, we have the head here, and then we have the right shoulder gradually unfolding, and the 135.600 level serving as the neckline of that reversal pattern. So we want to see price action break out of the 135.600 area to make this reversal pattern a mature and valid structure to be able to buy the USDJPY. So we are having a position right above the 135.600 with the hopes that price action will break out of that level. Now, talking about the buy position we are looking at on the USDJPY, I would like to state here that this is more or less a counter trend opportunity. So if we do have a breakout of the 135.600 level, we want to be very, very conscious while managing this trade. So as long as price continue to move in our direction, breaking out of the 135.600, continue to climb to the upside, we want to ensure that we protect our position by moving our stop loss accordingly to secure that position. And why have I said so? Well, we will be able to see this very clearly on a much more higher time frame like the 4 hours time frame. So let me quickly run through the 4 hours time frame here so that you can see what I'm talking about at this point. Now look at the 4 hours time frame here. You will see that we had a significant structure at the 135.800 level, which was a structure that was broken during the trading session last week. It was initially a strong demand zone before we saw the final breakdown of that structure here on Friday. And you all know what we look out for from a technical standpoint. Whenever we cite a breakdown of a structure, we expect that price action is likely going to come back and do a retest of that structure, probably in anticipation of another wave of bearish momentum to the downside. And because of the situation here, I told us in the 1 hour time frame that if price action breakout, we want to be very, very careful. As price action continues to the upside, we have structures that we can use to guide how we move our stop loss. As soon as price move into the 135.250, move your stop loss accordingly. 134.700, move your stop loss as well. And as soon as price gets into the 135.800 area, a structure which was a strong demand zone and was finally broken on Friday last week, I want us to secure the position on all the buy position that we have on this trade and wait out to see how price action will be reacting to the structure to decide if we are going to be adding more buy position to our existing trade, or we might be getting ready to sell at this point. So if we sight selling pressure below the structure, that is, price was unable to break out of that level, sellers negating all attempt by the buyer to break out of that structure, it might be a beautiful signal for a nosedive in this market. However, if price action breaks out of that 135.800 area, well, this might be another beautiful opportunity to join a trend continuation to the upside. So these are the things we shall be looking forward to. So if a breakout of the 135.600 level happens, please note that this is a counter trend opportunity. And if you're not feeling comfortable with a counter opportunity, please, you can stay out of this trade. Then another thing about this structure on the 4 hours time frame is this bearish trend line here, which started last week Friday. That's the bearish momentum that led to the breakdown of the 135.800 level. You can see the trend line falls around the 135.250 and the 134.700, where I told us that we want to be moving our stop loss accordingly to secure position as soon as price gets into the structure. So we might likely see selling pressure resume around that area one more time to incite another wave to the downside. So because of these expectations, let's ensure that we move our stop loss accordingly when price action moves in our favor. So that is that on the USDJPY, and it's on this note I will be calling it a day on the X Speed Live. But before we drop the curtain, let's do a quick recap of what we talked about today for the sake of those who are not part of the live session, the beginning of the live session today. All right. ICAS is asking, does it possible to continue to rise up BTC? It says 12 hours from 10 a.m. HK Hong Kong time. Unfortunately, BTC is not part of our pairs for this week, and we don't have too much time to talk about that. So you might want to introduce it to us Monday morning so that we can look at it together and probably be one of the pairs we will be monitoring for the week. Okay. All right. So let's do a quick recap of what we talked about today. So the first commodity we looked at today is the US oil. And on the US oil, we are beginning to see some buy pressure resume in this market. And we already have a buy position after price action broke out of the $68.85 level, which also shares a confluence with that bearish trend line that has been guiding our sell momentum since the beginning of the week. So a breakout of that bearish trend line for us is probably a sign that we might be having a reversal pattern in this market. So we are hoping that price action will continue to the upside. So we have a buy stop order above the $70 area with the hopes that it gets triggered, and we continue to secure our position as price action moves in our favor. And thinking of selling the US oil is a no-no for us at this particular point in time, and the reason is simply because of the current structure we identified here between the $68.85 level and the $66 area. And if you look at the lowest point price was this week, in fact in the last 2 years now, this is the lowest point price has ever been, the $66 level. We can see that price is yet to find a lower low to give us a sign that sellers are strong in this particular market. The last time price action came close to the $66 level was just yesterday, and what did we see here? We saw a sharp rejection of that structure where both candles that tested that zone closed in the form of a hammer candle. And from a technical standpoint, a hammer candle reveals that there is a lot of buying pressure around that area, giving us a clue that buyers are getting in gradually in this market. And with the breakout of the bearish trend line here during the early hours of today, it was another signal that the trend line may no longer be strong to continue to hold that selling momentum. So as a result of this, we had a buy position triggered here, and I told us all to move our stop loss to break even to secure this current position as we anticipate another breakout of the $70 level. Now, to sell the US oil for today, I want to see price action take out all the buy position at the $60 level for me to be comfortable selling the US oil for today. So if this does not happen, I will be staying clear from any bearish expectation in this market. Then we went on to talk about the US tech option, and the US tech option here, we were profitable for this week so far. In fact, in the last 24 hours, we were able to have 2 positions, which gave us quite a profitable thing here. We had 427 pips on the first position here, and the second position gave us close to about 300 pips thereabout so far. Now, going into the New York session today, we already have a simple setup here where price action has been caught within a channel where the resistance points sitting at the 12,600 and the support line of the channel is sitting at the 12,550. So what we are doing here is to wait for probably this structure will transition into a trend continuation pattern where the breakout of the 12,600 will be triggering our buy position. But if it turns out that this consolidation phase will be transitioning into a reversal pattern, then we want to be having a sell position at the breakdown retest of the 12,550 with a TP target of that sell position falling along the bullish trend line that has been supporting this bullish momentum since the beginning of the week. So we have a TP target along the bullish trend line, which also falls within the 12,300 and the 12,240. Then we went on to talk about the GBPUSD for today, where we finally saw the breakout of that trend line, and I think I shared a simple setup on a much more lower time frame. I think the 30 minutes time frame here, where I said those who had missed out on the sell position below the 1.21500 area, we want, as long as price remain below the 1.21500, we want to feel comfortable in our sell position. So we might likely see a retest of structure before another wave happens. So let's be on standby for that one too as well. Then another thing that could happen here is price action could break down this bullish trend line, which also shares a confluence with the 1.21100 area. So if this happens, we want to be seeing that as another opportunity to join a decline to the downside. But if it gets to that level and price finds it difficult to break down the 1.2110 level, and we start seeing buy pressure above the structure, reversal pattern on our lower time frame, then we might be getting ready for another wave of bullish momentum. So let's keep this in mind too as well. Then we went on to talk about the XAUUSD. Is it okay? XAUUSD, yes. And on the XAUUSD, we acknowledge the fact that price has been consolidating in the last 48 hours. And for those who are still in the buy position, I told us all to move our stop losses somewhere right below the 1,925 level to secure this current position. So we are still looking forward to either a breakout of the one channel to the upside for more opportunities to add to the current buy position, or a breakdown of the 1,915. But when we scale down to a much more lower time frame, we begin to see some simple setup here that we can actually use and make things easier for us to identify trading opportunity during the New York session. So what we saw here was a channel on the 15 minutes time frame between the $1,932.50 level, which appeared to be the resistance point on the 15 minutes time frame, and we have the support line here at the 1,928. And one thing I said here is that we could have our buy stop order above the $1,932.50 level for buying opportunity in this market. And if price action drops below the 1,928, just below the bearish trend line here, we want to be looking out for selling opportunities in this market. So the market is in a dilemma right now, so we have to be very patient to wait out for the signal in the form of a breakout of the channel to give us a clue into where price action will be going. Then we went on to close the day with the USDJPY, and On the USDJPY, this is what we saw on the 1 hour time frame. I showed you this. We saw that price has been consolidating in the last 24 hours, last 48 hours, between the 135.600 and the 132.500 area. And I told you that we might likely be seeing this structure here transition into a reversal pattern in the form, hold on a second please, might transition into a reversal pattern, which is looking more like a inverse head and shoulder pattern. That was the right shoulder, the head, and this is the left shoulder. But one thing we want to be doing is to see price action break out of the 135.600 level to confirm the validity of this reversal pattern here. So in that regard, we have a buy stop order above the 135.600 with the hopes that price action will be breaking out of that structure. And I also told you that a breakout of the 135.600 will be more of a reverse, a counter trend opportunity, and we have structures here that we want to be using to guide us while we protect our position. So if price action gets into the structure, we want to be securing our positions accordingly. So that is that on the USDJPY. So since we are in a flat channel, we wait for either a breakout or a breakdown of that channel for trading opportunity in this market. So let's see how price action plays out in the next couple of hours. So it's on this note I want to be calling it a day here. It has been a wonderful moment with you guys, and it was a profitable week for us. And in fact, the most profitable trade for us during the live session this week has been the US oil, as price action dropped to its lowest point in the last 2 years. So thank you guys. Looking forward to seeing you on Monday as we start the fresh week with a fresh new perspective in this community. So do have a wonderful evening everyone, and a beautiful weekend too as well, as I see you at the other side on Monday. Do have a wonderful evening. Bye bye.